Good morning, good afternoon, good evening. March the 20th. Can you guys hear and see everything? All right, cool. So today's FOMC, big day, lots of events chained together, but not for 4 hours, right? So until then, we have a range to be contend with. Right, we have yesterday's high, we have yesterday's low, and today's range has been contained to those extremes, right? So we've only made about 35 pips in the last 16 hours. And we are at 50% of the entire swing. Possibility is we go another 4 boxes to 61%, right? And considering this is making higher highs, higher lows, is this going to be making another higher high, right? Is this a bounce? I'm thinking it might be, right? When I look at the dollar index, right, the dollar index itself is at 61%, right? What's its ability to keep on going, right? What are the probabilities that it keeps on going? Right? We have to wait for what Mr. Powell says. Okay, and so because it's at 61 and our euro is at 50, I'm betting on the bounce. I'm betting that the Dixie is going to come off 61 and not blast through it. Right, so that's kind of where my mind is at, right? I'm thinking this will be going up because the Dixie is incapable or should be incapable of going higher from here. Okay, and then Mr. Powell will clear the fog, right? We'll know the facts as they are. Typically, that chain of event evolves in a
Financial Times reports that the EU are to impose election safeguards on big tech.
typically that chain of event unfolds in a ritual. Like it's almost the same thing over and over and over between the presser and the actual number release, which comes first. There's that 30 minutes there. That's usually a drift. And in that drift, you have time to, reposition yourself. It's during the press conference, people will have questions, and usually the top of mind questions will come out, within the first 2 or 3 questions. And after that, everything kind of, okay, now
Color from the FT, so we get more color from the FT. X, TikTok, and other big online platforms will be subject to EU fines for lax moderation within the week.
And so what we have to do is understand that the press release, and we can't read his, we know the numbers come out, but we can't read his mind. And so we have to wait for the speech, we have to wait for the questions. And then once we know the aspect that the market's going to take, that could follow through until tomorrow. Like, so literally what we have happening today at lunchtime or thereafter, 2 o'clock in New York, this could continue through Asia and through the European session tonight, right? Ideally, the European traders will want their kick at the can too, right? And then following that, we come back to work tomorrow and it's a whole new day. So take that into consideration, right? We have to stretch
Posted out
time.
the full FT piece on the feed for anyone interested.
Right, so understanding what we have here and where we are, that's key for today, right? We're at 50, and with Mr. Powell and the preceding news and all this kind of stuff, we're gonna be bound in this area probably until the speech, and then I'm thinking we go up from here. Right, so let's take a peek on an hourly, right? So we have yesterday's high as a ceiling, we have yesterday's low as a floor. We're 34 pips within that. If we look at this on a 5-minute scale, you can start to highlight, support and resistance that was useful yesterday. Right? The usual process. It's the same thing we do every day. except today there's a catalyst, right? There's going to be something that fires things up. Somebody's stoking the fire today, right? I'm just doing this with my mind's eye. Really uh, no rigid approach. I just want to see where I can pick off these lows, where I can pick off some of the highs that stick out. And over time, this ends up building this ladder, and within this ladder, you ask yourself, asking the same questions over and over, right? Do you want to add positions? Do you want to remove positions? What do you want to do if the price gets here? What do you want to do if the price gets here? Right? If this is moving in your favor, maybe you're going to be adding to your winners, right? If it's moving against you, maybe 3 levels down, you can start peeling off losers instead of waiting 36 pips, right? This allows you to create a plan before you need it, right? Plan B before you need to use plan B, right? And then on this side, on our 1 minute chart, we're using an average. This is an average swing. We've measured this, we've calculated this, we know this is true, right? Right there, it's just an average swing, and we're using this to measure the market, right? The market gives you an average, or maybe it gives you less than the average, or maybe it gives you more than the average, right? This is just an average. And with this average, you get to understand what the market is trying to do, right? Breaking out of the box with time remaining gives you the idea that, hey, maybe there's another box just like that coming up, right? 2 boxes. And this remaining time, lo and behold, typically gets delivered in price instead, right? So instead of just wasting time sideways, because we broke out of the box early, the earliness gets spent going up, right? So that's a way of understanding what the market is capable of doing, right? There's no news, there's nothing coming out, there's nothing on the wire right now, right? It's just moving on its own, and it has the ability to move boxes upon boxes upon boxes, right? So going into the speech, or going into the news event in 4 hours from now, we're range bound. And when the news comes out, probably more than likely we'll be near that 50% again. It's not uncommon, right? And then at that 50%, Mr. Powell now moves the market the market will move in whatever direction sees fit, right? But it's based on the speech. Right? We can't read his mind. That's the problem. All right, so range bound until proven otherwise, with a bullish bias by the end of the day. All right, so basically, I want to be buying support, red candles. Buy red candles at some kind of previous support area, right? And that therefore allows you to bounce off of support. Assume this was support over here, right there. You would have bought the red candle and made your money on the bounce proceeding. All right, so let's find us a red candle, and let's go buy us some support. We're just trying to make 3 pips over and over and over. Yeah, just about 15 minutes ago, 20 minutes ago, I was on my taskbar there at the bottom, I was pushed a Windows update, and I clicked on yes to reboot. Big dummy. I had to restart everything minutes before the trading session. It's so annoying. There's another pop-up. I usually disable all these updates, Windows updates. I disable them through the group policies. And since I've updated the platform from Windows 10 to Windows 11, I guess I neglected to do the group policy changes. I'll be doing that this weekend. All right, so let's find us a candle to buy here. Something to buy into, right? Something red. If this is going up, it's not going to the moon, right? It's going probably to resistance. It will find some kind of resistance. It will probably come back down and find some kind of support, right? We are range bound until the news event breaks us out of this floor or this ceiling, right? So we have to bust a move out of here and go higher up, or we have to bust a move below yesterday's low and go lower, right? Until we break yesterday's low. Where was it? I think I have it back here. Yeah, right around here. Till we break yesterday's low, we're not going, we're not going down. And until we break the high, we're stuck. All right, going up and down this ladder, conveniently enough. Things are tightening up, right? Okay, so let's find an excuse to get in. Right around here would be good. Right, it's a red candle. And if I'm looking to my left 4 minutes, 5 minutes, I'm at support right here. If it drops a little bit more, I can open click number 2, maybe right around here. Support / resistance, one becomes the other. That's what you're trying to line up with your eyes. You're just trying to see the average, the middle of this zone here. And you target that as an entry. And at this time of day, one average bar is 1 and 1.4 pips. And I think my target is at 3 pips, right? We're still working on the recovery from 2 days ago, right here, right? This was our yesterday. We're trying to repeat a similar outcome today, right? There we are. Ooh, there's a red candle. If it drops a little lower, maybe we can add to our buy, right? Consider yourself willing to buy 4 boxes to 61, right? So if we break this low here, we might be buying all the way down to 61 before we experience the bounce. Right? Yesterday, remember, we were selling. And we ended up making our money by the time the video recording finished. Some of you may have been in a little longer, so you would have gotten out in the afternoon or overnight, but nowhere were we threatened more than 1.5 boxes. Right? So, even if you got stuck upside down yesterday, you survived. Right? The joy of trading a mean reverting market. Right, let's see. Red candle. I'll take 1 click right there. Ooh, I was 1 second late. Right? The dollar index at 61% of its own retracement. Right? That's useful information for us, considering our euro makes up about 60%, 58% of this dollar index. Right? So if the euro itself is at its own 50% of its range, and DXY is at 61% of its range, this is likely going to drive the bus.
So we're looking now to the fear and greed index, 70 out of 100, which indicates greed, while the crypto fear and greed index is at 74 out of 100, also indicating.
Oops, sorry. I'm still adjusting some software in the background.
7% at around 13.93.
This is what he's speaking about.
So in 10 minutes time now, at the bottom of the hour, we see the release of the weekly EIA inventories numbers. Crude oil inventories forecast is a draw of 1 million on the prior draw of 1.536 million. Range sees a build of 1.6 million to a draw of 3 million expected. Gasoline inventories forecast is a draw of 2.6 million on the prior draw of 5.662 million. Distillate inventories forecast is a draw of 0.5 million on the prior build of 0.888 million. Inventories of crude in Cushing, the prior was a draw of 0.22 million.
All right, so that's all oil related stuff. It doesn't really apply to our euro, but
so just keep in mind that last night the US API crude oil stock change come in at a draw of 1.519 million, which was lower than the expected build of 0.077 million.
if you're trading the CAD, you might be interested in those numbers. Okay, so we've got up one rung in the ladder. Right? What will the market do next? Will it come back a rung and continue down to 61? Or will it continue to go up a couple of rungs and then come back down to 50 in time for the news? Right? I'm thinking between this red and green line, we have no choice but to trade what we see. Right? We're going up until it tells us otherwise. Right? It might tell us otherwise around here. Right? So we could play the long side for a bit, maybe get a chance to rotate our position and play the short side for a bit. Right? Ideally, I don't want to get stuck with shorts. Right? I'm bullish for the event or for the outcome of the event. Right? Just looking at the previous news events and what we started our expectations with a month or so ago and what the market is now expecting, right? 5 or 6 cuts down to 2, right? There's a lot of unknowns yet, and I think Powell will clear that fog and set us up for a move, one way or the other. Right? Conveniently, the market is finding 50-50 until then. Right? It's going to have as many of us confused as possible. All right? Limit your risk, find where your limits are. We're using yesterday to find our ideal direction, right? The market will tell us what it has in store by either breaking yesterday's high or breaking yesterday's low. And because of where we are, on the big scale here, on the big scheme of things, the dollar index is already at 61. Right? The dollar index is already ready to roll over. Right? There's a clue. There's an opportunity here. Bye-bye. Right? We don't want to go crazy with the clicks. Otherwise, they'll turn into a buy trade will turn into a goodbye trade. Goodbye this, goodbye that, goodbye house, goodbye car. So yeah, go slow. Right? A lot of people are just witnessing red candles on their daily chart, and they've been told to trade the daily chart. They've been told to trade this. And so in their brain, they're seeing the market falling to the South Pole, right? But in reality, it might find support and get stuck there, right? Get stuck here and end up going up, right? Plan B might be the priority, right? All of a sudden, you have to have the ability to switch off plan A, to give up, throw it away, crumple the paper and move on. Our psyche is not trained for this. Right? You've been brought up to do the best job possible until the very, very end. And right here, you
In
could
5 minutes time now at the bottom of the hour, see the release of the weekly EIA inventories numbers. Crude oil inventories forecast is a draw of 1 million on the.
Yeah, okay, we're not dealing with oil. But so yeah, what you have to deal with is the fear of the unknown, and we're using an average to measure that unknown. And so we can see clearly through the fog for a certain distance, right? And then our fog lights kind of don't mean anything. We have to relocate the box, right? This is it right here. There's click number 4. Okay, so now I have one box of risk. If the market drops lower than this, I'm allowed another box. Right, lower than this. If I pin the high there, right? If I pin from here and there, where the market went up 1.5, and I started buying in the upper half, right? I ignored the first box. I don't want to be buying here in case I'm wrong and it goes to 36 pips. I would rather be 28 pips rather than 36 in drawdown. Oh, sorry. If it goes this way, I mean. A lot of this Fibonacci it's derived from human nature, right? It's a self-fulfilling prophecy. I'm not the only one that sees this 50% here, right? Just even if I remove the tool, looking at what this picture shows me, my eye is automatically drawn to half of this. It's almost like I'm self-driving, my eye is brought here by nature. And if it goes a little bit further than that, it doesn't look right. It looks offset, 61% or 62. Think of it in terms of participants. If we do this as we speak, the people that have been playing the up leg, well, 50% have thrown in the towel. If we drop to here, 61% will have thrown in the towel. Right, that's more than half the people injured. Market's done its job. Right? You can think of it in terms of participants. Let's go back to our 5 minutes. I want to see the price action on this scale. right. Sorry. Come on, let us close some winners here. Today's calendar is very important, in the long run. It will decide what happens to us for the next couple of days at least, which is kind of nice. Come on, so close. I still can't believe I rebooted the platform. I rebooted the computer 2 minutes, 3 minutes before the live session. Oh, that's the oil news right here. Non-event for us. It's going to be a slow day until the FOMC and all that good stuff. And then Jack will come out of the box. We've been winding it up for weeks, waiting for this. Right? In this particular meeting today, or this particular news event, we have the dot plot, right? We'll get to see, or we'll get to know how many cuts do they intend, or does he intend to see in the future? Oh man, come on. I got 4. There's a 5th. There's a 5th, and then I'm saving the others for coming back down here. Sorry. In here. I want to have an average. If this is coming all the way back down, I want to put trades in this lower box so that the average of the two boxes is somewhere in the middle. Right, so I've already built a position up at the top, looking to go higher, right? So buying the high for a higher, and I'm willing to buy low for higher, right? Basically, I'm bullish. We're not trying to break world records, right? We're just trying to find consistency. And if we can avoid the news altogether, we're golden, right? We get to keep our wins, our winnings. If we push through trading the news, we risk losing. It's, I know that's what we're here for, but that's a different page on the playbook. I've already been allowed, to count cards in the casino. Why would I take those winnings and gamble them at the roulette wheel? I'm just going to sit here and count cards. until I know it's not worth it. Lunchtime, the risk is too high. Slow and steady. Right. Slow is smooth, smooth is fast. Trading is nothing like what the movies make it look like. Right? The willingness to spend money, to basically risk box number 2, risk box number 3, to fix boxes 1 and 2, so on and so forth. That planning ahead is what differentiates this type of trading from FOMO, right? Everybody else has this fear that if they don't take the current trend, they're going to miss out on something. And so they're always looking for the trend. They're always trying to find what is the current trend. In our assessment of risk, trend is not the top thing to look for, right? It is important, but it's not the top thing that we trade. Right? I'm trading support or resistance based on a top-down analysis. The trend is part of that analysis, but it's not my buy. It's not always the bias that I end up trading. Right? So ideally, we're not trend traders. We are range traders. We just happen to use ranges on top of ranges, and we make trends. We build the trend with ranges. It's you have to see things. Oops, I changed it. I didn't want to change it. Let's duplicate it. There we go. We have to see things for what they are, remove the fog of war, just see right through this. Fantastic. All right, a little bit more, just a little bit more. We start closing winners. Right, the reason why I put the boxes back is because I'm thinking this might not be the top and it may try to go up, right? When I had the boxes like this, I was getting ready for a swing down, like I was, or swing low when I was getting ready to be buying down here, right? This ability to change our mind is what kind of this allows us to do, right? This security blanket, measuring cup, it allows me to see two different perspectives. Like, what if it keeps going up? And what if it fails and goes down from here? Right? I'm just measuring the future with the boxes. If I'm measuring things correctly, my trades open and close in the same box over and over and over. I just keep moving the same box. It's when things are upside down or backwards or threatening that I end up in drawdown. And I know when to stop drawdown, right? 4 boxes. I don't click there until I can't click no more. There we go. First winner of the day took 39 minutes. If you exclude the first 5 minutes of the recording that were on mute. Hey, I'm still new at this. Yeah. It's like a musician that never listens to music. Come on, come on. I'm waiting to see a bigger red candle so I can recycle that trade. I just don't want to buy at the top. I want to buy stuff that's cheap. You know, give me the bottom of the box, not the top of the box. We're just looking a little bit for a little bit more of the exact same behavior, you know, just 3 pips, 3 pips, 3 pips. Over time, it adds up to 9, and 9 adds up to 18. All right, we're just looking for average moves above or on top of average moves. Right, that's what this ends up building. If we put a fib on this current leg, just out of curiosity, we are 38. Why not go to 50? Right? Why not go to 50 before coming back down to this 50 in time for the news event? Right? Why not go up to 50, 50% of this, and then come back down to the big 50, 50, the big 50 of this in time for the news event. Right? Big picture kind of stuff. Right? Imagine the price may be trying to do something like this right here. And then maybe coming back down to here, 50% in the next 2.5, 3 hours. And then I'm thinking if we're lucky, something like this. Right, but then also depending on what Powell has to say, we could see something like that. Right? Mr. Powell is the big linchpin today. All my crystal balls are at the shop, getting polished. Ouch. -4 Celsius in the Rocky Mountains with the very, 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 very thin, thin snow. Annoying. Come on, I want spring to be here so bad. I love the 4 seasons, but I need to see them changing. I'm I have this big circadian nature to me. I need the seasons. I go crazy if I go south for the winter. But here's my chance to put number 5 back on. Right, that trade that we closed earlier, I just put it back on. Calling me crazy. Yesterday was a good day. Day before, not so, but I've already forgotten about that. I'm just trying to recover one day at a time. Hit the average, either average number of trades or average pips, or know what you can do typically on an average day, and then leave the casino. And there's no need to push the recovery. That typically pushes a bigger nightmare. Just stick to what you know works. This is why you don't see me putting on swing trades, right? Because swing trades is what created the mess 2 days ago. It's all good, right? We're all here to learn how to lose, preferably with a smile, and professionally at that. Oh, we're not John McEnroe. If you don't know who that is, he was a really bad tennis player. Oh, a good tennis player, bad loser. He would throw his racket and shit like that. All right. Everyone now in the group is starting to see how, uh, you know, we're becoming weather forecasters, right? We're really good at telling the weather inside the box. So it's like looking out of the window. But the more boxes we tend to look for into the future, the more unlikely things become, right? And so we have to limit our forecasting abilities, you know, to what's within reach. And that's where the 3 pips, 3 pips, 3 pips comes in, right? Within reach, within the box is an extremely high probability. And we're talking like in the high 90%. And so that's the key to this whole solution, to this whole problem. You know, instead of using one big grain of salt, why not use a salt shaker? You know, right? Lots and lots of tiny, tiny trades. I'm buying myself a 20 million trade track record in a career instead of blowing up my career in 10 trades. All right. And then because I have tiny, tiny, tiny targets, achievable, repeatable, I find consistency that way. And then I can consistently walk away from the casino before the casino catches up to me. Right? 5 clicks, 5 times 0.02, I'm risking $108 of a $5,800 account. And I'm not looking to make $1 million, right? If this works, I make 50 cents per trade or 45 cents per trade. Right? Clearly, the risk to reward ratio is upside down. What I'm relying on is an overwhelming amount of wins compared to very, very few or seldom losses. It's a numbers game. Trying to see. Okay. Quiet, peaceful. Come on. We knew from the beginning we would be in a range. We knew from the beginning today would be pending news. And so it's all about, you know, the ability to sit on your hands and not lose your cool. Don't get thrown off your plan because the market is getting under your skin. Right? It's create plan A and plan B, and then have the willingness to switch. You're not, if you only have one outcome in mind, you're married to that one outcome, more or less. You're at least engaged to it for now, and it becomes a problem when it's time to let it go, right? Because of the effort, the time, the emotional toll that it will take to let it go. Disconnect. Just don't care. I don't care. I have my 5 clicks already, so I can't afford any more. Ooh, and I have hiccups. Ooh, boy. All right, so like I said before, this either moves in my favor and closes my trades, or I have the opportunity to assume it's a high and I can measure the next swing using boxes in this fashion. And then if that is where I'm positioned for now, I have the opportunity to add around the bottom of the second box, right? And in doing so, I create an average, which becomes my break even. Right? Same thing over and over and over. You guys must be tired of hearing me say this. I'm not tired of saying it though. I'm just saying it out loud. Right? Planning ahead. Plan A, plan B. Eventually you end up executing on one of them. You know where you're wrong all the way across. No, you can define being wrong before you even start. That in itself takes a big load off your shoulders. You know, when you go to put, gas in the car or petrol, when you drive up to the pump and you see the price at the pump, do you refuse to put gas in the car, or do you just adjust how much you put in because of the cost? Right? That's kind of what we have to do here. Right? We have to adjust the clicks because of their value. Right? And we try to not overdo it. Right? Dollar cost averaging. I don't care what the price is. I just know how much money I have to spend. Trying to figure out what to do for the next hour. Do we continue to trade in this fashion? I would assume so, right? I want to stick to the plan. In my mind, my plan is this right here. Right? I think we're going to be playing in this range until Mr. Powell has something to say. And then with that comes a drift, in between the news and the press release or the presser. There's a drift. There's a period of time when the market is just drifting, right? That's where you want to take the opportunity to reposition for the big move. Yeah, Francisco is asking if the ranges have shrunk. Yeah, they have shrunk. The average daily range has gotten smaller. The average trading range, so our average 1 minute bars have shrunken. We're making less money today than we were 2 weeks ago, or no, 3 months ago. In theory, you're still milking the market for what it has to offer, right? So if the volatility comes back, you all of a sudden start making more money, right? You're just adjusting to what the market has to offer. You're not inventing things that are not there, clearly. Otherwise, you would have blown up or chopped yourself to bits, right? It's this adaptability. So yeah, for the next hour, I think we need to remain bullish into 0854, 55. And then going into the FOMC, it would be wise to expect 0840 again, right? Back to 50% of the bigger Fibonacci, the really, the daily range. Right, this right there. We'll make it blue. There we go. All right, so this bigger move, I think, is what we'll be visiting just in time for the Powell news event. Right, and for now, I personally think we are bound to this. And so maybe we're limited to this 50%, or conceivably 61. Right? Anything can happen. All right, I'm playing this right here. All right, so that will be the plan. If you guys don't feel like trading through the news event, be flat before lunchtime New York, or before 2 p.m. New York. All right, so you'll probably get the chance to do that in the next couple hours. Simple stuff. All right, simple. It's not necessarily easy. All right, I'll let you guys go. I see you guys tomorrow morning. Good luck. Trade safe. Bye bye bye.